Thanks very much for your patience here. My name is Senior Accounts Manager Adam Howes, and I am hosting the webinar today for Trading the Morning Report. We're just going to have a look at, in my view, one of the most indispensable tools that you have available to you right now to be able to make some really good trading decisions. We're looking at really simplifying the trading process here. A lot of you obviously have different time commitments, different schedules. And the reason that we provide the report to you is really just to provide the most up-to-date information possible and being able to make some really sort of short, sharp execution trades on a daily basis. So it's really about reading the report daily and really capitalising on the information that's been given to you. So without further ado, let's get underway. Just a short general advice warning before we begin. Forex trading involves trading risk capital. The following education session is not to be treated as personal advice. Forex CT provides general advice only that does not take into account your personal needs or circumstances. Okay, so we're just going to take a look at the daily report today. Well, it's called the daily report, but this comes out, in the morning. And just off the bat, if you're not getting the report for any reason, please contact your account manager as soon as possible. We'll send you a link that you can actually use to subscribe to it. So it's really just a case of visiting this link, inputting your details, and you'll automatically be subscribed to the report. Just bear in mind, if you're not getting it and you have been subscribed, it's just handy to check the social or promotions tab on your email server, because sometimes it may come through to the promotional or some junk or spam folder on your email. So that might be the sort of the quick fix there. So we're just going to take a look at the morning report for today. And as I said, it's really about making really short, sharp decisions in the market based upon the information that's given. Not everybody has the time to be looking at charts all of the time, let alone sort of, having an ear to the ground on all the fundamental views or news in the market. This is the reason why we compile the information for you. So hopefully by the end of today, we can rebuild your confidence, rebuild your, obviously your, proactive, taking of these trades on the information given. The report itself will come out at 9:30 in the morning, so we're looking at tailoring the report to come out a little bit earlier prior to the ASX Open, which is going to help you jump on these opportunities early. But let's just have a quick look at today on the report that we were given. Forex CT Daily Report for Monday the 23rd of October. Now, typically what we'll do on the report is we'll go through a short commentary on the pairs about what's actually affected that individual pair. And then from Trading Central's preference, we'll give an indication whether to take a short or a long position in the market with different targets. This is much the same way as you're actually looking at the daily technicals. So you might open up your daily technicals, you'll have a look at the graphs, you'll have a look at the arrow up or down. My preference is probably by design, that the report is a little bit more basic and easier to use, and the fact that it doesn't have graphs, and it is really telling you what the graphs are saying anyway. So, for instance, today we had the AUD USD short position or sell position preferred. Now it's below a pivot level of 0.7840 with a target of 0.7800 and 0.7780 in extension. And we provide a brief commentary on what's affecting the pairs. So we saw the Aussie briefly rallied on good employment data last week, but has failed to stem longer-term investor confidence. From a technical point of view, 0.8100 remains a critical psychological barrier. Short positions below 0.7840 with targets of 78 and 7780 in extension. If we look down at our graph, we would find out that would actually be the suggested chart of the day. AUD USD intraday, the downside prevails. We have short positions below 78.40 with targets of 78 and 77.80 in extension. Going up to the other pairs today, we had the Fed for the USD JPY, the Fed, or the Federal Open Market Committee, much like our RBA, but this is the US equivalent. The Fed remains on track with an increased probability of a rate hike in December, despite contrarian inflation data. Another risk factor for the pair was Janet Yellen's comments on Friday, as she repeated that the latest fall in inflation was an unexplainable surprise. If she can't explain the phenomenon and inflation remains consistently low, it could mean fewer rate hikes in 2018. There is one on track for December. So we do have long positions below or below 113.05 with targets of 113.80 and 114.05 in extension. So if we were to open up our graph on the USD JPY, we would have an arrow pointing upwards, pointing to a target of 114.05, and we would find the pivot level would be 113.05. So rather than opening up your graphs each and every time, one of the main benefits or advantages of trading the morning report is to have all that information reduced for you with a simple word recommendation. Long position preferred. Again, long position preferred on the GBP USD. Short position preferred on the euro. Short positions preferred on gold, and long positions preferred on Texas crude oil, where we have a first level and a second extension target. Now, what confuses a lot of people is where to actually aim for a target. When we have a short position, where do we actually aim for? Well, we can aim for either. We can aim for the shorter term target or the longer term target. Most traders tend to go for the second term target or the second level target on the graph, which is known as a Goldilocks zone. They've calculated that level for you. Shorter term target is a little bit unrealistic, and a longer term a little bit far out of reach, probably for the purposes of intraday trading. So most traders would go for 77.80. However, there's no problem with going for 78 or 77.65. It just depends on maybe some longer term sentiment, but on the amount of take profit and the amount of time you want to be able to ride the trade. Is it possible that the price could get down to 77.65? Absolutely. But based upon the analysis done for you, where they've taken all the averages in the price movement, you were given a realistic target of 77.80 in extension. The other important piece of information we actually compile into this document is the economic announcements coming up for the day. Now, this is taken from a website called investing.com. Investing.com is a one-stop resource that is used to provide a lot of commentary on what's called fundamental or news analysis, and also technical analysis, okay, which we just looked at on the graph. This basically gives you a list of short, low, medium, and high impact announcements affecting the market. When you have a look at the graph, we've got 1, 2 bulls and sometimes 3 bulls attached to any given announcement. The bull is not to signify that the price will go up, okay, and sometimes it will, but it's not to signify that. The 1 bull, 2 bull, and 3 bull system is based upon volatility. So if it's a one bull event may not be as volatile as a two bull event. So the PPI, we'll have a look at the CMY. The CMY house prices, okay, coming up today at 12:30, that may not be as volatile as, say, the GBP USD index for the Great British Pound. So this event on the pound would be more volatile for the pound than the house prices would be for CMY, affecting maybe the Aussie dollar. So a 3 bull is guaranteed in most all cases to be very volatile on the market. 3 bull systems are economic events pertaining to GDP, employment, inflation, and most importantly, interest rates. Because the preceding 3, the GDP, employment, and inflation, are likely determinants of which way interest rates are most likely to go. If interest rates are proposed to be higher or increasing, usually that's seen as bullish for the currency. So we look to these high impact announcements as a precursor for that. But the reason we give you the events is just to expect some volatility around the actual trade that you're trading. So if we had traded the AUD USD downside or a sell position today, we would know, a little bit later today that we've got AUD USD index, and we've got an announcement pertaining to that at 4:30. Okay, so we've got, an announcement coming up, which is kind of like a medium volatility. It's not expected to create that much move in the market. But yet again, it's handy to be able to know about these announcements, because if you come back and see the price at 5 o'clock, you would have known that announcement had created some movement on your pair, and hopefully in the anticipated direction of what's been suggested. So the most important thing to take away from this webinar is to get set on a regular action plan where you're regularly visiting this report as much as possible. I said in the previous webinar, in relation to the right trading mindset, is that we must undertake often in any endeavour that we do. So to be able to visit the morning report 1 to 2 times a month won't cut it. You can't assess your performance based upon 1 to 2 trades. But the more active traders, the one that are consistently implementing a plan, would visit this report daily and at a bare minimum, as a suggestion, be taking the trade of the day setup being the AUD USD for today. Tomorrow, it'll be different. Or it might be the same, we don't know. But the point is you need to be taking at least one trade a day on the AUD USD, the downside prevails. There are a couple of exciting prospects in the pipeline on this particular report. We have the prospect of multiple trade setups coming online for this report, so not just one, but you might come in, say, a bit later towards the end of this week and find a number of trade setups presented to you on maybe a currency, a commodity, and an index. So the benefit of that is that you can hedge your portfolio and diversify your portfolio with a number of trades as opposed to just one. So this is a sort of a premier trade to follow is crucial on a daily basis, followed by our secondary sort of considerations on, the other pairs that we're discussing here. But this is one that should be taken at a bare minimum. The other exciting prospect as well is that we have in the pipeline at the moment an afternoon report, which will replicate what you're seeing here, but a bit more of an updated version around about 3:30 to 4 o'clock in the afternoon. A few questions I get from time to time are, what time should I be trading this trade, or what time should I be looking at my morning report? Obviously, if you're looking at the morning report at 4 p.m., you may be out of the loop. So it is suggested around the time that you see the report as often as you can to the timing of it, which is around about 9:30 a.m. The benefit of that is obviously that's placing the trade before the Aussie session is underway. So obviously the opening of the Aussie session will set the tone for the day. Coming into a trade later in the day is not necessarily the best thing. So we need to be capitalising on this information at the time when the report comes in. So let's just recap here. The main points to take away from the webinar are the timing and visiting of the morning report is crucial at 9:30. The other thing we recapped on was the placement of the trade on the chart of the day as one of your premier trades to focus on with our secondary trade setups here. And in time, what you'll be able to focus on, obviously, which we'll recap on, is multiple trade setups on charts suggested here as well. And don't forget, one of the critical pieces of information at the bottom, which everyone seems to miss, is the upcoming webinars. Much the same way as you've taken time out of your schedule to visit this one, which is fantastic. But we have an abundance of other webinars coming up as well, where you can simply click on this button here, and then it will take you to the homepage of Forex CT to have a look at a whole lot of other webinars on some really juicy stuff in the market. This is just one, a cap of the iceberg in terms of what's out there, in terms of the information that you can capitalize on. But if you miss a webinar, you can always come back to the YouTube recording, which is here. This will take you to our YouTube page. If you click on here, you go to videos, and then all of our previously uploaded webinars are listed on YouTube if you forget them. Weekly market update is obviously one you need to attend live, but if you miss one on, say, understanding leverage and margin, that's an educational video that you can come back to time and time again, and one that you wouldn't necessarily just watch and discard. You can come back to it multiple times to obviously increase your knowledge and understanding of that concept as well. So folks, hopefully that's given you a little bit of clarity on it. Remember, the main thing to take away from that, and please take this away, it's the most important lesson, is you must execute your trades to be potentially profitable in the market. Set yourself the goal, if you can, this week of trading the morning report, trade of the day, and secondary trade setups here. If you need any help or any additional help or clarity on anything that we've talked about today, please get in contact with your account manager, and they'll be more than happy to assist you. For the time being, thank you very much for your attendance, and we look forward to seeing you at the next webinar. Thank you again. Cheers.